Welcome to Markets Now. I'm Michelle Rook along with Chip Nellinger, Blue Reef Agri-Marketing. Kind of a mixed day in both grain and livestock futures trade, but a horrible day in the soybeans, Chip. We had taken the 200-day moving average out yesterday, and boy, the funds just hit the sell button again today, didn't they?
Yeah, they did. And they're still
Soybeans.
caught up in this money flow. It seems like they just kind of pick and choose, where they're going to take their money out of. They're pretty much done in the corn, I would say. They've got a big net short position built up in wheat. And unfortunately, they're still long. At least a few days ago, 120-ish thousand contracts of beans. We closed under that 200-day moving average, and it kind of hit the green light for everybody to run for the exits at once on their long positions.
So November beans have lost like a $1.42 since we popped over that $14 level. How much more downside risk do you see there?
Well, I think the downside in November might be a little bit more limited. If you
Right.
noticed today, the bear spreads work, meaning the front end of the market was much worse off than the new crop. And so if there's further liquidation, I think it's going to be in the May contract and the July contract. It will drag the November along with it, but not to the same extent. So, I would think 30 cents, 20, 30 cents would be about what the max would be in the Novembers, but that might mean another 60, 70 cents, unfortunately, in the May and the July.
So I understand why they're getting out of the meal market because funds are still long there, but they're already short soybean oil. So why the selling pressure there today?
Yeah, I think it's just a little bit momentum, new, fresh lows, and the funds they like pressing winning positions. They were already short soy oil. We tried to have a little bit of a rally. That failed. And so I think some of it's momentum. I think also we're kind of trying to get a little better, more fairly priced with some of the other world vegetable oil markets. I think we're
Right.
just a little bit overpriced in trying to kind of find a little bit of an equilibrium. And unfortunately, that meant for the short run, we've got to take soy oil a little bit lower.
Right, because I think palm oil's hit 5-month lows and rapeseed has had a huge sell-off as well. Okay, so the lower soybeans kind of pulled the corn down with it today because corn, obviously, the strong exports should have held that market together.
It did. I think corn, it shows better signs of a bottom to me, or closer to a bottom. If you've got another 30, 50, 60 cents to go in beans, it probably is going to weigh on corn a little bit. But all through this sell-off, the bull spreads have worked in corn. We've seen China in there, 7 of the last 8 days for U.S. corn. I think we're at arguably a really good value area for the price of corn. Doesn't mean we can't go a little bit lower, but I'm a little more encouraged that we're closer to a bottom. The bull spreads are working even in a down market, and so I think we're at a value area in corn anyway, but might still have some influence if beans continue to sell off here.
Right, and we've taken pressure off that corn market because the funds are already short there, right? But the question is, how much shorter do they push?
Yeah, I mean they are short, first time in a couple years anyway. Historically, the end of March would be the wrong time for the funds to build up a big short position in corn. It doesn't mean they won't do it because largely, they're technical traders and they're not focused on fundamentals necessarily. But it's kind of the wrong time of year with the entire growing season of the second crop corn in Brazil ahead of us. And it looks like we're coming into what could be a little bit later than average spring for us and our entire growing season. So kind of the wrong time of year for the funds to build up a big short position in the grain market right now, at least on the corn side.
Yeah. And wheat trying to bounce here. Obviously, Chicago wheat hitting new contract lows this week with the funds already short. There's potential there for a little bit of a relief rally at some point, isn't there?
Yeah, there for sure is. I think if you watch those wheat spreads, you've had Kansas City really gaining on the Chicago. I think that's part of the pressure
Right.
on the Chicago. So yeah, I think that you probably stretched that rubber band a little bit too far. You just need a spark, and I think you'll get the funds running for the exits in their short wheat. And maybe that spark is the fact that Southern Plains wheat crop still just looks abysmal and really not much relief for them in the way of rainfall in the forecast.
Yeah, I'm waiting for the market to recognize that. Hopefully that's coming up. Cattle market, another one where we're seeing maybe not a lot of respect for the fact that I know cash was a little lower in the south, but the north had a stellar week and the market is still trading at a discount to that, the live cattle.
It is, and actually, that scares me a little bit. We've seen these funds over the last 2 or 3 weeks just kind of pick and choose which market. they still have a lot of length in the cattle market in here. And so when they get their fill of getting out of their positions in beans, I'm a little bit fearful that they got more to go in cattle. Fundamentally, things are still very, very bright, I think, out into the future. Got a little bit of negative headwind here with the seasonal considerations on live cattle, and I'm a little nervous the funds might have some more liquidation here ahead of month end.
Yeah, the macroeconomic jitters have kind of spooked them out of this market, obviously. Hog market, all right, new contract lows again today. How many days can you do this, Chip, before you finally see an oversold recovery rally?
I don't know. I mean, I'm about 3 days early on the deal trying to pick a low in here. I mentioned to somebody earlier today, it's one of the most oversold, just beaten down markets I can remember in many, many years. It'll come quickly and without warning. I think we're closer to it than we were a week ago, obviously. But man, what a brutal market. When it comes, you could see a $4 or $5 rally very quickly over the course of about 2 days, just because it's stretched so far to the oversold side.
You bet. All right, thanks for joining us, Chip Nellinger, Blue Reef
Thanks.
Agri-Marketing, and that's Markets Now.